Okay, so here we go, video number 3. So like I say, first thing I always do is check the economic calendar. Today we could see we had medium impact spring budget UK. We also had PPI, which is quite a major one for the US dollar. Now, although I trade the German DAX, stocks are quite correlated, and usually you'll see from your own experience that if one particular instrument or one particular market moves, they all seem to move. They may not go the same way, but they all seem to move in influence with the news. So, first thing I did is I started actually on a H12. Actually, I started on daily, then went down to the H12, and then I stopped at the H8 when I started to notice a few bits and pieces. So this is the H8 time frame. We can see here we've got a bearish order block, which led to an impulse here. So although the market is incredibly bearish, on the daily, it's broken structure to the downside. It is a bearish market. I still have to be aware of what is below us and what's price reacting to. So if I see a wick like this, I have to look and see what could price be reacting to. So not only have we got this bullish order block or this area of demand, whatever you want to call it, which is highlighted here by this grey blue box, I also noticed we had an old level of resistance. So it started here, it resisted, it came up, resisted, okay, it came up, resisted, broke through it, tested it as support. So we then found that again today. Going down to the H1 time frame, let's turn on our... Oh, my New York Midnight's disappeared. 1 second. There it is. Don't know what happened there. So that's New York Midnight. We've seen these 2 trading days play out for me. I took a long here, took a short up here yesterday, which the stop loss still wouldn't have been broken. You could have caught all that move. Dread to think what that would have been, probably like 30 to 1 or something like that. But, you can't always predict the stopping point of a market. But anyway, so looking at this, again, London just had this huge push down. We're talking a push of where's London's high? So there's London's high. We're talking a push of something like 520 points down. Okay, we found this old support. We found this H8 order block, and we put in London's low. So there wasn't really much to talk about on this time frame because I was sitting there watching this just go sideways. But what I had to discover is, 1, am I going to trade today? And 2, if I am going to trade, what needs to happen for me to be able to get into a trade? Now, going back to structure, you can see here on the 1 minute time frame, there's the lowest point on the 1 minute time frame today. This is a 1 candlestick pullback, so this isn't a structural level. This is just a short-term high. This is a short-term high. The last 2 candlestick pullback that led to a lower low was here. We had 2 candles that traded outside the previous candle's range. So technically, from a structural point of view, until that high gets broken, we're still bearish. And until this low gets broken, we're not looking for where that break point came from. But what I did start to notice, and again, I was on a call with Sam. He was taking a few trades on various instruments, and I was basically just sitting here watching this barcode from 12 o'clock when I started, right the way to when I managed to find an entry. But I don't trade ranges, but I do trade liquidity. I trade people getting stopped out. I trade, the obvious move getting grabbed. So I instantly struck this line across here. You notice these pound signs, that means liquidity. And the same down here. These pound signs here means liquidity. I had to find the liquidity that I wanted to get taken to interest me into either buying or selling. Today was a coin flipping direction, if I'm being honest with you. It was justifiable in both directions. I could have took the buy because we'd found a level of support here and created an area of demand. I could have took the short purely for the fact that there's this wick point here, which was the first pullback in this leg, so that would have been justifiable. But then as the day went on, I noticed we had 1, 2, 3, 4, 5 wick points. You could nearly class that as a sixth. Yeah. So, these are places that were holding. The price was holding. It wasn't getting broken. But also below, I'm looking below and I see wick. Okay. Now, this wick here also interested me, but my entry came before this wick was taken, and the fact I had this double wick point here, I was more than happy to take this trade. This trade was actually executed on a 30-second time frame. So just looking in depth here again, we pushed down, turned around, fiddled about, push up, push down, rejected this area and pushed up. Okay, so when people are seeing this, it's a double bottom, it's an area of support, whatever you like to call it. To me, it's a place where people are going to be putting their stop losses if they're trading this range. Yeah, so they're going to want to be trading this range. Think about it, you've got this point here, price comes down, retail market sees this, they see price come up, it rejects, they're going to be putting their buys in and around this area here. They're going to be putting their stop loss under here, and they're going to be trying to take out this point here. Now, this was executed on a 30-second time frame, and I didn't tick every box of my criteria. You can't always get the perfect trade. You can't always get every box of your criteria. So here we had price come down. We had this wick through. Okay, that's important to me. These people have now been stopped out. Yeah, unless they were clever and they put their stop losses right here. But in general, this area has now been liquidated. Pushed lower. We pushed up. Okay. Pushed down again and rejected. Now, this is what I mean by I couldn't tick all the boxes. Technically, in my trading plan, I have a 2-candle push. But if you look at the size of this candle here, it has to leave a wick, opposite direction candle, and a 2-candle strong push. But look, this one candle took out 1, 2, 3. It nearly took out 4 candles. That was good enough for me to start putting my Fibonacci on at the very least. Price comes down, tests into my 50, rejects. That's a buy. Okay, now, where was my target? I'll be totally honest with you. My initial target was these 4 blue dots, but I was also open to the idea that this is quite a good level to take some profit, especially when you're getting in with a tight stop like that. At the end of the day, if you run it up to here, that's a 10 to 1. I got out at 5.3, and I tell you why. If money comes quick, I will take it out, like a 5. Sometimes a 4. I try and get a 5. If it's pumping, because I know as quick as a market can pump, it can dump at the same time. And quick money is easy money as far as I'm concerned. So this one was done and dusted in about 1, 2, 3, 4, 5, about 5.5, 6 minutes, 5.3. Now this is a prime example today. And do you know what's unbelievable? This still hasn't actually been taken. Okay, now this move did reach a 12.5, but this liquidity is still sitting up there, and this actually continues to go and hit where my stop loss would have been. This is a prime example of patience, a day of patience. You could have been caught in so many different moves here. From 12 o'clock when I started, you could have been trying to trade this range. You could have taken a short here on the liquidity grab of these two. You could have pulled that short off potentially, but I knew I had to be patient, and I just had to mark up where are the 2 points that I'd be interested in. I'd be interested in a wick through this line and a wick through this line. And on the 30-second time frame, I got the wick I needed. It started ticking the other boxes of my entry. We sprung up in 5 minutes time. Those candles were nice big full candles. Bang, I closed out at a 5.3, took my money for the day. Almost like a sniper sitting in a bunker or sitting in the bushes and foliage. I was just waiting for the right time to get into this, because it's days like this where you can get impatient and end up, taking 3 or 4 trades, hitting 3 losers and a winner, or sometimes not even getting the win. and trading with frustration. But yeah, that's my sort of top-down analysis. I obviously had other things marked up. If we go to the H1, I did have things marked up this morning for if we were looking for the short. So I pulled a Fibonacci from this point to this point, marked my Fibonacci levels, a little bit like the trade that we pulled off up here yesterday. I do believe you got New York's previous low here, London's previous low. These were both not retested. You have got various other things like this H1 inefficiency, this purple line I've put here. This is an area that is still of interest to me at some point because, there's totally inefficient price from this wick to this wick. We've got an inefficiency there that will need to be filled, same as we've got an inefficiency here. So, I have my markups for the short, but after sitting in consolidation for like an hour, I sort of realised this is going to be a wiki range trade, and I did get it, and we're now coming down to take out what looks like London's low. But yeah, that was my trade today.